I'm in the process of writing my quarterly presentation, and one of the things that I've been covering in the quarterly presentation really since the middle of last year is US retail sales, or more precisely, the number for US advanced retail sales, which is provided by the US Census Department. I started covering this because of a commentary by Kevin Hassett, who was then chairman of the Council of Economic Advisors during the period of the Trump presidency last year. And I've seen him presented a number of times, and he's a really, really brilliant guy. And he was talking about how the enormous recovery in credit card sales. And this is covered within this area of advanced retail sales data, which is released by the Census Department. And interestingly enough, the most recent number became available last night, and we saw a drop, a pretty tiny drop for the month of July, between June and July, of about 1%. But when you see the quarterly in a couple of weeks' time, you'll see where I'm going with this, that prior to the GFC, we saw a level of sales, or peak level sales in the beginning of 2020 of a very large number, $530 billion a month in January last year. Huge number. And of course, with the US shutdown, that fell dramatically and it collapsed to $410 billion a month by April. But what Kevin Hassett was saying last year was the recovery from that was very, very strong. And I looked at that, and it seemed to recover up to the previous, where it started in the beginning of the year, within only a few months after the economy started to open up a little bit. And then because of the dramatic expansion of income support to people at the lower end of income in the US, what we saw is an enormous surge in retail demand to levels that were way above anything that had been thought possible in the period before the GFC. And this huge surge in retail demand, supported by welfare payments and other payments, generated an enormous boom in the retail sales number, which peaked in April this year at $629 billion a month. And I say peaked last year because since that time, that has been the number has been dropping month by month since April, including the most recent month. And in the most recent month, the total number that I show, US advanced retail sales and food services, which includes restaurants, is $617.7 billion a month. Now, for comparison, if I just drew a trend line from where retail sales were before the shutdown last year, by the end of this year, I would expect this to be about $570 billion a month. So what I'm expecting is, just because those income supports have been taken out and people are going back to work, that this number is going to continue to drift down as we go through the year to around about where it would have been if you hadn't had all these income supports. The income supports are now being withdrawn as people go back to work in the beginning of the year. And this is part of the process of the slowdown of growth rate of the US economy, because we think the US economy this year grows by a bit over 6%, which is 3 times what the normal average growth rate of the US economy is. Incredible level of growth rate. And that's why US earnings are so strong, and that's why the US stock market has been so strong. But that growth slows down very significantly in the coming years. It falls back next year to about, we think at the moment, 4.4% in 22, and we think the growth in 2023 falls down to about 2.2% and stays there at the same level the following year. And as that's happening, what should happen is this retail sales should fall back to trend. You're seeing the same thing already happening in Australia, and you're seeing it in the US. This doesn't mean that there's a recession around the corner. Like I say, growth is still strong. Part of the reason I wanted to talk about this today was that there was a measure of consumer sentiment. The University of Michigan Index of Consumer Sentiment fell heavily last week, and that was generally regarded as a bad indicator for the economy. I've looked at the history of this indicator over the years, and it's terribly bad. It doesn't. University of Michigan Index of Consumer Sentiment tells us very little about the future of the economy. There is one which is really, really good, and that is the Conference Board Index of Consumer Sentiment, and that still says that growth will be extremely strong. I might actually show if that measure isn't published until the 27th, well, the 28th our time. I'll try and put that in the quarterly as well, as that should support stronger growth. So growth is slowing down in the US economy, retail demand is slowing down, but still it's very, very strong in comparison to any kind of historical precedent.